We all know that real estate has created more millionaires than any other industry on the planet. We also know that it has created a lot of heartache due to mismanagement, overborrowing, and just simple life events that happen to all of us. Welcome to the Cash Flow Pro podcast. My name is Casey Brown, and I am your fearless leader. And although we might be bourbon sipping and at times foul-mouthed Southerners, we will always do our best to be honest, straightforward, and due diligent with all of the information we pass along to you. Welcome to the show. Hey there, and welcome to today's episode of Cash Flow Pro, your daily real estate investing podcast and YouTube channel. I'm here today with Joel Block of Bullseye Capital. And he has been in the fund business and the card playing business led him to the fund business. And he said it was playing. It was like playing cards at the biggest casino in I guess the universe, really, right, Joel?
Well, you know what? We started in Las Vegas. I started there as a kid, and then eventually graduated to some of these big casinos on Wall Street. So I've kind of moved
There you
from one
go.
place to the next. That's kind of it.
Yeah, awesome, man. Well, I tell you, we were kind of talking about the audience beforehand, and there's a good bit of people out there who maybe have just a tidbit of knowledge. I think virtually everybody that's had a retirement account or has a retirement account at some point has heard the word hedge fund or or has heard the word obviously mutual fund or something like that. But it wasn't until pretty good way through my life thus far that I even learned what a hedge fund was. You just always hear the term hedge fund and automatically you start thinking of Wall Street and Chicago and the mercantile and the exchange and the New York Stock Exchange and all that stuff when you start talking about hedge fund. And it wasn't until I really started diving into this real estate stuff, the real estate fund part of the business, I guess, is when I really learned what a hedge fund was, and it almost blew my mind, really. So why don't we start with this? Why don't you tell us a little bit about yourself, where you come from, and then of course how that card playing turned into what you now call a business.
Yeah.
So tell us a little bit about yourself, and we'll kind of take it from there.
I don't know that the card playing has all that much to do with me becoming a syndicator or a fund manager, uh, but it has a lot to do with kind of my background. And I talk
Sure.
about the concept of advantage play. And advantage play in Las Vegas, advantage players are people who can beat those unbeatable games like blackjack.
Yep.
And I was one of those players. I was at the top of the game. I was one of the best players in the world. I played on teams, and it really kind of helped me understand what it means to be at the top of the game and to be the best in the world. And that's an important standard that I always aim for. And I got other people around me do the same thing. But as a youngster, when I got out of college, I started at Price Waterhouse. I was a young tax guy. I was doing tax returns for a giant syndicator. And as much as I hated doing the tax work, I loved reading the partnership agreements. And I said, you know what? I don't want to be a tax doer. I want to be a deal maker like these guys. And I quit the firm and met another guy, and we went out and tied up a little property and then cold called a bunch of doctors. And we just started kind of raising money. And that's what we did over the next many years. And then after a handful of years there, I fell into a venture capital transaction, raised $10 million, built a company, and ended up selling that to a Fortune 500 company some years later. So, I've been around the block. I've been doing deals for years. And in the mid 2000s, I set up a hedge fund, and we started buying distressed assets kind of on the heels of the whole calamity that happened in 2008. So
Sure.
I just knew it would be a good time to put together some capital.
Yeah. And, and I was at a conference last week, and that was one of the things. Of course, the big discussion now is the turning economy, basically. Like we've hit the peak, and it's really strange because we all saw the peak coming, and it was just like it just went by like we were on a train and we watched it, and now it hasn't exactly crashed, and I don't think it's going to crash necessarily, but it's very obvious that the tide has turned just a little bit, right? And they were telling us, or I'm trying to think who said it was a discussion, a panel discussion, and they were talking about that some of the biggest businesses are built in times like we're headed into, because people start seeing, just like you said, this distressed assets, and it's very important, I think, and you can correct me if I'm wrong, but I think people should be positioning themselves right now in order to to be ready to capitalize on some of the deals or some of the stuff that's getting ready to come down the pipe.
Yeah. Well, it depends what kind of people. I mean, different kind of people need different kinds of preparation. If you're a
Yep.
professional investor like you are, like I am, professional investors make money on the way up and they make money on the way down.
Right.
Um, Non-professional retail people make money on the way up. In the last 15 years, it's been easy. I mean, everybody
Yep.
made money the last 15 years. All you had to do was just throw money at the real estate and it went up and you made money. So everybody made money. Um, Now that we've kind of hit the peak and we're trailing downward, people who were throwing money at deals 2 years ago are begging to get out of them. The hedge funds have slowed down their acquisitions. So brokers and other people now are sitting on properties that would have gone in 10 seconds just a
Yep.
couple months ago. So
Yep. And what you said there brings up a very interesting point. So, several years ago, I had my Series 3 license. And for those out there that may not know, Series 3 is purely commodities trading, and it was tied to my agricultural background and so on. But anyway, the reason why I bring this up is to your point of professional investors make money on the way up and on the way down. And a lot of people, when you're looking at that, stock market, when you're looking at the exchanges and you're looking at, oh my gosh, the stock market's lost this much, or corn is down this far, or beans are down this far, and I've always tried to remember that there's for every winner there's a loser, right? For every loser there's a winner. And so when you're looking at that market going down, somebody somewhere has shorted that position, right? And so again, professional investors, to your point, make money on the way up and on the way down.
yeah,
It just
it
depends on
works a
which
little
way they're going.
differently in real estate because we don't have the concept of
Yep,
short. Uh,
that's right.
I've always thought it'd be awesome to have the concept of short in real estate, but we don't. It
Yep.
just doesn't exist, not yet. I know there are people who've thought about ways to put it together, but I'm not aware anybody's been successful. But
Yeah, but to the point of you can make the money on the way down by, well, again, it always goes back to my point that I've discussed on this show many times, is how many properties would Joel take specifically today, almost virtually sight unseen, if somebody called you and said, hey Joel, I'll sell you this for the same value that it was worth in 2006.
yeah,
Right? I mean,
listen,
there's virtually no property you wouldn't say, hey, yep, I'll take it, boom.
if the
And
price
I say that
is right,
because
it's going to move.
that's right. '06 was a peak. I mean, it was never gonna reach more. It was never gonna get higher. It was never gonna do better. And now it's like, here we are at these other points. So if you bought and just held, maybe that's the game. But
Yeah. Well, listen, the opportunity to buy on the way down is really good. And what that brings up is the value of cash and the power of funds. A fund, when investors put money into funds, they're basically putting bullet in your gun. So you can go out and hunt. I mean, that's basically what they're doing. They're allowing
correct.
you, they're
I
allowing
never
you
heard
to
it put
go
like
out
that.
and shoot elephants, at a
Yeah,
good price. And
that's right. I love that, man. I love that. I need to write that
well,
down,
that's
or
one of your tweetables right there. It's
oh my lord,
investors
yeah.
are putting the bullets in the gun so you can go hunt. That's what we do, and the investors get to share the profits in exchange for doing that, for helping us to be
Yep.
ready. They make us ready, and so that makes it possible for us to go out and do what it is that we do and bag elephants. And that's it.
That's right. Bag elephants. I like it. I like it, man. That's awesome. Bullet in the gun, man. My son, he's an avid hunter. He loves.
And so let's keep going here for a second. I mean, in this
Yep.
inflationary environment, and 2008 was not an inflationary environment. It was a very low inflation
Yep.
environment. The economy was broken. I mean, there was a lending crisis. I mean, there was just some really bad behavior that had been going on for years, and it exploded. That's not what's happening
Yep.
now. What's happening now is quite different from that. We have an inflationary environment, and investors need to be very, very careful because they're
Correct.
sitting every day you wake up with cash in your bank account, it's worth less than it was the day before.
Yep.
And so you got to get that money invested in some place. If inflation right now is running at 8%, hopefully you're going to make 8%. And a lot of the smaller deals that guys like us do, they return 8 or more percent. Wall Street
Yep.
doesn't generate 8% on its REITs, on its real estate funds, but guys like us do. And it has to do with risk profiles, it has to do with overhead and things like that.
Yep. You're exactly right. And I, I'm always intrigued at the real estate investment trusts and how I guess it, it's not so much the amount of gatekeepers that they have up the chain, but it's that all those gatekeepers are drawing a salary at some point. You know what I'm saying? I mean, you've got you've got guys that tell the other guys what to do, and then you've got somebody that tell those guys what to do. It's just
Yeah,
it's
and,
set up
and
like a
then
corporate.
there's a lot of overhead.
Yeah.
Not only do the funds have a lot of layers of management and so forth, but then the every broker has to get paid for bringing that money to the table, and it just
Yep.
and I don't know what investors think, but they're not getting these people for free. It's not like somebody else is paying the bill. I mean, they're paying the bill. So
Yep.
about 10 points of every dollar is going to these kinds of
It's just
overhead.
I feel like it's just watered down. It's a watered down syndication model, and it works. I mean, it works because some of the teacher retirement plans and some of those other pensions, they want the security of, I guess, Wall Street and the accounting and the SEC regulations that go along with it. Um, but when you're talking about, you're also talking about probably a minimum investment of $10 million in one of those deals versus one of our deals is 50 or 100,000. You know what I'm saying?
So
There's a
there's
huge.
there's two different kinds. So the ones you're talking about, 10 million. I mean, that's institutional money, and institutional is
Yeah.
different. Uh, those things are loaded in a little different way. They're loaded with asset management fees, which are 1 or 2% per year. And if the whole deal only returns 6%, the asset management fee is 2. The investor's
Yep.
making 4, and the fund managers are making 2. They're making 50% of the same what the investors made, and that makes a
Yep.
lot of these investors upset. Like a lot of the pension funds, retirement funds, these big agencies that are putting institutional money in, makes them angry. Retail investors, it's a little bit different. Those people, will put in, $500, $25,000. They'll put in small numbers, and but the fee structure and the thing still works out the same. They just don't have the same visibility. I mean, they could look and see what the fund fees are, but they tend not to. But
Yeah.
they're
Yeah. A lot of people buy into the story versus the. Now you've got some professional investors or some very savvy, sophisticated people that have been in many syndications. Obviously, there's those folks out there, and they know right where to go in that PPM, and they can scroll down through there and get everything they need in 10 minutes. But then you've got some people who just get so enamored with the story of the deal and how the deal came to fruition and how all of this stuff is going to come into play and it's all going to fall into place. And they're like, yeah, where can I write a check? I'm ready today. And so you get a lot of times people. So it really depends on how it's marketed or I guess who the person is on the other end of the phone when you're trying to make that
Yeah,
deal. And
for sure, for sure. So it's but retail investors are in a real quandary. The kind of people that come into deals like ours, which tend to be smaller investors, 50,000 to several hundred thousand. I mean, those kinds of people.
yeah.
Every day they wake up, their money is less, and that's a really
Yeah.
unsettling
Yep.
thing for them. So
Yep. Especially as much as that's been accelerated here just in the last 90 days,
and it
120
seems
days
like it's
almost.
getting worse. I mean, it seems like it's getting worse. So
Yep.
uh, you know,
Yep.
I think that syndicators and fund managers are a really good alternative
Yep.
for some of these investors.
So do you currently have a fund that's open or
We
funds
we
that
have a
are
fund that's
open
been
or
winding down for the last year or two, And
Okay.
we bought. These funds have a useful life. I mean, you determine a life a span, and so ours was like 7 years, and we're at about 7.5. So we're at the end of our useful life, and we're ready to wind down.
Sure.
So,
Yeah.
in fact, we're just
And
liquidating
then
our.
what is what I guess I'd like maybe if we could to get a little synopsis of the life of that fund. I mean, you say it's winding down. Has it been open for investments throughout, or tell us? Let's give the listeners just although all of them are different and everybody's got different timelines, everybody's got different fees, everybody's got different everything, right? But I'd like for you, if we could, just give us a synopsis of maybe say what year that started and then
Yeah,
how it transitioned as it started to gather assets and move
the
through
fund
its
the fund
useful life.
opened in late 2012, and it had
Okay.
an open around for probably a year. And then in 13, I think in late 13, early 14, we opened another round, raised a little more capital, and then we bought the assets of another fund. And so so through a couple of different things, that's where most of our assets came from.
What was the dollar amount of the fund to start with? I mean, can we ask that? Do you
Yeah,
mind to
it, it
tell us
was
so
it
we
was under
can?
five. It was under 5 million. It was small.
Okay. Okay.
So
Okay.
most of these funds are relatively small because we were buying and fixing and flipping residential properties. We're building some stuff. We built some housing units both in Austin and Nashville. So we built different things, and that's what we did.
Gotcha. Gotcha. Do you still have anything in Nashville
No,
right
it's all
now?
sold. Everything's been
Dang.
sold. The notes have all been sold. Everything that we have has mostly been sold. Now we're kind of just in the wind up phase, so we're just really wrapping it up.
Sure. And then are you gonna get back into it? Are you gonna open another fund here
You know,
relatively
I'm I'm,
soon, or
I'm
what's your?
contemplating what to do. Whether to open
Yeah.
another fund. I was thinking about doing a crypto fund, but the timing might not be right for that. Or
Yeah.
maybe the timing's really right for it. I'm not sure.
Timing could be. I was just there thinking it's such a because the thing with crypto and you can tell me this has rang true virtually through every investment endeavor I've ever been on or been in, and I think this is my take on the crypto, right? So crypto takes a certain um a certain brain powered individual type of brain powered individual to even gather the concept, right?
True.
And I think what's what's limiting crypto from just like exploding and taking over the world is the people that have the mind that understand exactly what it is, that understand exactly how it works, that understand exactly what purpose it serves in society. I think it has reached the maximum of those folks. I think from this point forward, there's going to be a huge education shift that has to take place. And I say all of this, I bring all of this together by saying, for instance, my father is 67 years old, 67 years old. And if I went to him and said, Dad, listen, happy birthday. I'm going to give you X amount of dollars in Bitcoin, right? I'm going to give you X percentage of a Bitcoin. He's going to be like, okay, um, I thank you, maybe. He's not, he has no, now he's obviously has the concept of how the two values are attributed to one another, the dollar versus the crypt versus the value of whatever percentage of a Bitcoin you give him. But what I'm getting at is he would have no idea how to access it. He would have no idea where to go to even use it. He would have no idea how to make it do anything. And so I think this is just purely my mind is I feel like Bitcoin reached the maximum amount of people with the education level to even understand. And my mother is even a little more worldly than my father, and she would have an extremely hard time even like what do you do with it, right?
Well, let me
And
let me
so
let me give you a different perspective on this
please,
because
because
I think you're probably right about Americans. That's probably true. But Americans are just a tiny fraction of all the people on the planet.
sure,
And
sure,
these cryptocurrencies have been more popular and more well adopted in other parts of the world. When
okay,
the internet came on the scene 30 years ago or so. And it's only been 30 years. It's not very long that the internet has really happened. I mean, I remember I was invited to a private program at IBM in
Yeah.
1994. And,
Yep.
and the guy tells the whole audience, maybe there's a couple hundred people in the room. He says, ladies and gentlemen, you're going to see the most revolutionary thing you've ever seen. And we're all sitting there very excited. We don't know what's going to happen. It was a private invitation deal. And we're sitting there wondering what's going to happen. They turn the lights out, they turn the screen on, and they flash this thing on, and everybody's looking at it going like, well, what is it? And he goes, ladies and gentlemen, this is a home page. And we're all thinking, well, what would you do with that? Like what, like what for? Like no one understood what it was. And
Yep.
that's kind of where crypto is, and you're right about that. But the United States, unlike the crypto experience, we took the bull by the horns and we owned the internet. We developed it. All the big internet companies came out of the United
Yep.
States. And there have been a few other big ones in some other places now, but most of the great
Sure. Sure.
companies came from the United States. Crypto, on the other hand, comes along, and the United States, they're pushing it away because they're terrified of it. Our government is completely terrified of this. Part of the reason we've had the collapse is because people like me who want to set up funds, we don't know if cryptocurrency should use the rules of commodities like a potato or the rules of securities like a stock. We don't know because the government deliberately has not been telling us. And
Yep.
and part of the reason for that is because the SEC has been trying to allow some of their friends. Remember that the SEC chairman is a former Goldman guy, and Goldman's been pouring billions into cryptocurrencies, and the credit card companies who stand to be eliminated. Because remember, when the internet came on, we all watched this. Uh, Travel agents got blown up, recruiters got blown up, all these different industries got blown up because they
Yep.
weren't necessary anymore. And credit card companies are sitting saying, hey, listen, we don't want that to happen. And the Wall Street people are sitting around saying, hey, we don't want that to happen. So they're buying up all these assets as best they can.
Yep.
And that's really been a big.
Well, and hey, banks for that matter
Well,
too.
that's what
I
I'm
mean,
saying.
banks.
So the financial
Yeah. Just
institutions, that's what I'm talking about.
yeah.
So they're trying to control it, but in the meantime, the we haven't really done a great job, and all these other countries are doing better. So the bottom line is that the adoption in the United States is like 6%, but the adoption in places like India, where they don't have sophisticated banking like we do, is way higher. So people love moving money. It's kind of like Venmo or PayPal, where you're moving it electronically. It's really
Yeah.
simple, but you can move really big numbers of dollars, and it
Yeah.
just more simple, and it's powerful.
Well, and I'll tell you, um, and I can. This is I'm merely. I don't want this to sound like I'm completely in disagreement because I'm really in fully agreement with you. I guess what I'm getting at with this next point is devil's advocate type position, right? And here's what my thoughts were. Now, so you go to the gas station down here on the corner. There's a gas station about just a quarter mile down the road, right? And I walk in and I get my sweet tarts, I get a Sprite, and I get a Snickers bar, whatever. My I need those three things like I need a whole wheat, right?
Hi, this is Casey Brown, host of the Cash Flow Pro podcast and YouTube channel. Have you been thinking about investing in real estate but just don't know where to begin? I'd like to help by inviting you to check out our website at www.3000capital.com. There you will find an array of material that will help you learn all about real estate syndication. And while you're there, be sure to check out our free video series download titled 5 Must-Know Keys to Success in Passive Real Estate Investing. I'd also like to personally thank you for making Cash Flow Pro part of your day. Now, back to the show.
But I go up there and I can hand them say $5 and I get my change and I go out the door. And versus going in there and having to like simplification has got to take place in the crypto business. And I say that hypothetical example is the same, just like my 67-year-old father. The two together, they're simplifying the crypto simplifying the crypto experience has got to happen some kind of way. And because right now it's really I noticed it with myself. I mean, like Coinbase, you go like if you go in there and you start saying, "Hey, I want to buy $10,000 worth of crypto," all of a sudden there's a red flag. You get the first red flag, right? Then Coinbase will doesn't don't they don't have the manpower to I guess service these accounts.
Well,
So
so
my
it goes
account
it
gets
goes
locked up.
back to what I just said, which is the government has failed to come up with rules and regulations, and the government hasn't really been an intermediary like they normally are. Like in banking, they make sure that there are certain rules in place to prevent against fraud. Those rules
Yeah,
have not been set up yet because the government has been so busy trying to give the friends a head start, the banking friends, so they don't get blown up when this all happens. They're helping them to own the means of production there. They want them to own most of the crypto systems. They want them to be the brokerage houses. They want them to be the banking houses. They want them to be the intermediaries. And because of that reason, a lot of the protections that we're used to in the cash society that we live in don't yet exist. But the United States is going to get forced into this, whether we like it or not, by our trading
yeah,
partners.
you're
For
exactly right.
example, a lot of the Arab countries where we buy our oil, Saudi Arabia recently said, "Hey, listen, we're not taking United States dollars for oil anymore. We're going to take Chinese yuan because they got so mad at President Biden that they said, hey, you know what? We're going to do something different." And all of a sudden, the panache of the United States dollar is diminishing. And
Yeah,
what's happening is, so now we're in this war with Russia, and we tell them, hey, listen, one of the sanctions is you can't transfer money using the SWIFT system. Well, you know what? Fine. If we can't use the SWIFT system, then we'll just use the Bitcoin system. So that's what's
yeah,
going to happen. It's going to these kinds of actions are going to force companies or countries into other mechanisms, and Bitcoin is the one that's unregulated, which is beautiful. I mean, it's
yeah.
for all these kinds of transactions, it's a beautiful system. It,
Well, let me ask you this, and I know we're kind of veering off here, and we're gonna bring it back to the middle here in just a minute. But one last kind of question about this again, this devil's advocate position, or really not even that, but a question: how long before the United States comes out with its own digital currency?
I think within 10 years.
I agree, and I just wanted to make sure that I wasn't completely crazy
Yeah,
in thinking
I
that,
think I think
hey,
within 10 years.
if Bitcoin falls, the United States is going to kind of step in here and say, "Hey, we're going to save the day, and now we're going to roll out this
Here's what I think is going to
USD
happen.
equivalent."
I think that it'll be a United States dollar type of whatever the name of whatever they call it. But the infrastructure, the machinery of the way the cryptocurrency works is better than the way that our banking system works. The
Yeah. Oh,
it's
way more.
enormously better.
Yeah.
I mean, they're
Absolutely.
trading trillions of units on these digital stock markets, and our stock market, I don't know, a billion is a lot. It slows everything down. So they're doing trillions and trillions of transactions. So it's a better platform, and I think that the concept of having, currencies that don't have any backing is not working that great. But for now, I think what's going to happen is the United States is going to say, here's the dollar crypto, and we're going to use the machinery of it, and that's a big part of how it's going to work. And the other
Yeah.
things are just
Yeah.
going to be
Yeah.
speculative, like every other commodity that you ever dealt with.
No, and I think honestly, the biggest objection my father would probably have, and my mother, and and anybody else's parents who are of that age group, the biggest objection that he's going to have is, and I know this because I've talked to him about it, right? And he has a pretty decent idea. I don't want to sell my dad down the river or some simpleton who's not worldly or doesn't know, um, but he says I can hold a dollar in my hand, right? I can hold a dollar in my hand versus I can hold this digital device in my hand that somebody could. And again, you and I both understand and have a pretty good concept of how, just for instance, Bitcoin works, right?
Yeah, that's an
And
easy one to get over because the truth is,
but he's saying somebody could infiltrate this wallet and take all my money.
yeah. And listen, that's true, and the government needs to
I
fix some
know,
things. That's true. But let me put it like this: when you were at summer camp as a little boy, you probably mailed your parents letters, and now
correct?
you send them an email. and they're very comfortable with email, and they're very comfortable with text,
I
and they're very comfortable,
I'm in
and
full
so
agreement.
they can't hold a text in their hand, and they can't pin an email to the wall and put it on your bulletin board or whatever they would do when you were a little kid, right? But they
Yep.
got used to it, and it's the same thing with this. I mean, they'll be fine with that. The thing that I've heard people say, and this brings us right back to real estate, is why does it have any value? Why does Bitcoin have any value? Why is it worth 20,000 or whatever it is right now?
Yep.
Well, why is the United States dollar worth anything? You know why?
Yeah, it's a piece of paper.
Because we agree that it is. That's the only
Yep.
reason. And real
That's
estate,
the
hey,
premise
listen, let's
behind the
go
whole
back to real
thing.
estate now, because that's what we're trying to work on. What makes a
Yep.
house worth 100,000? And then a week later it's worth 150
Yep.
because a willing buyer is willing to take the commitment, and
Yep.
that's the way
Exactly
that
right.
economics works. Sometimes value is invisible.
Yes, 100%. And sometimes value is not necessarily, we all hear it's in the eye of the beholder, right? I mean, I've heard that since I was 1, 2, 3, whatever old. And beauty is in the eye of the beholder, but I say it and say value is in the eye of the beholder, right? Because I may have this picture that's worth $87 billion because there's a bunch of people willing to pay that. You may have a picture that's kind of like it, not really, and maybe it's worth $10, right? So
Exactly. That's right. Yeah.
or vice versa. So anyway, it's all in agreement. That's exactly right.
Yeah,
So,
and see,
well,
but
listen,
here's the important point about this: is professional people recognize what the value is. They understand what other people do not. And you talk about blackjack. I can count a deck of cards. I have a pretty good sense about what cards are coming next. I'm sitting with six other people at the table. Those people don't know what they're doing for dinner, what they had for lunch, and they don't know anything about what's going on around them. And I know so much that's
yeah,
happening. I know what card's coming next. And that's what professional investors do too, is they have a situational awareness and a certain set of knowledge that allows them to see things that other people don't see, and it allows
yep,
them to understand things that other people don't understand. And that's really the power of being a professional investor. And that's why retail people need us, investors need us, because we direct them into things where they belong.
that's right. I would completely agree with everything you just said, and I'll tell you from experience speaking, there is nothing worse, in my opinion, than sitting at a blackjack table with somebody that does not know what they're doing.
Well, that's most people.
Just it always seems to, because I have a very set, and I've always thought this. The only way to truly keep the odds in your favor is to have everybody at the table playing with the exact same rules. And the exact same rules are the exact same rules that the house plays with, basically. And
Well,
like you take my wife goes up there and she gets a 16, she like loses her mind. Like she does cartwheels and can't decide what to do. And I'm like, I hit 16. You hit 16 every time. And if everybody at the table hits 16,
well, unfortunately, what your wife does with her 16 has no impact on what you do with your hand. I mean, so those things are independent. But the bottom line is that one player if you know what you're doing, if you're an expert player, then you see the world in a different way than everybody else. And that's how it works for real estate too. Is real estate professional people, professional investors, and professional investors are not the same as brokers. Brokers are just introducing people and kind of transferring knowledge. I mean, it's a totally different skill
yeah,
set. But the people who are responsible for making these acquisitions, we're doing these deals, they have a certain sense about value that other people do not have. And those are the people that you want to ride on their coattails.
that's exactly right. So, well, good. Great discussion, man. I mean, I feel like we solved almost all the world's problems in like what, 30, almost 33 minutes here. So, listen, Joel, I got a couple of questions that we ask every guest that comes on the show. And there's no right or wrong answer. We just try to get some information out of people so we can share what we know and pass it down the road. But what is the best book that you have either recently read or are currently reading?
Recently, God, I'll tell you, let me think what the name of it is. I can't There've been I've run through a number of books, especially as audiobooks. There was a great book on
Sure.
communication I read recently. There was a great God, you know what? I can't think of the name. It escapes me. I'm sorry, but there have been a couple pretty good ones. Sorry.
It's all good, man. We throw these out of left field, so
Yeah. Well,
we
hopefully you're
try
out
to
of left
just
field. I'm standing in right field and I missed the ball.
that's all right, man. No problem. All right. Well, tell us what is now. This one's going to be a little bit easier. What is a dream vacation that you have either taken or hope to
You
take?
know what? I love going places in the United States, and I was recently in Niagara Falls. That was kind of a bucket list thing. I was
Wow.
speaking to a real estate audience in Toronto, so I stopped in Niagara Falls, Canada, for a couple days, and I have to tell you, it was just spectacular. I just stood by the water, listening to the water, and listen. I've been really cool places. My wife and I've been really fantastic places, but this was just something special to imagine that for 24 hours a day, nonstop, every single day of the year,
Yeah.
for thousands of years, the water is moving just like this, and
Yep.
it's just an amazing, overwhelming thing for a human being to look at that and see the magnitude of it. It's spectacular.
Yeah. I have never seen it. It is definitely, as you stated, a bucket
It,
list
it it
item
was a
for
bucket list thing for
me.
me for sure. Yeah.
And well, awesome, man. Well, listen, Joel, thank you so much for being on the show today. And if the listeners heard something that resonated with them, or maybe they want to reach out to you and learn a little more about you or about your company, how can they do
You know, the
that?
best thing to do, we have a brilliant set of videos on how syndication works, and really kind of dedicated more to the syndicators, people who want to build structures and funds, because we're one of the our company probably builds more syndications and funds than just about any other company in the country. If you go to
Sure.
syndicatefast.com, you will find that. You can sign up, get free videos. We're not going to bother you too much, and it's the most remarkable library of videos. People would send us in questions just like the old Dear Abby, and we would answer the questions and tell people, "Hey, what's the difference in a syndication and a fund?" And I would explain it, and then you can make an appointment to talk to me or whatever you want. If you're a serious person about syndication, or an investor about syndication, you want to ask some questions, I'm happy to talk to you. I don't have anything for sale. We don't have an open fund right now, but listen, we've set up quite a lot of funds, and I know a lot about how this landscape's working.
Awesome. Well, Joel, thanks again for being on the show. And listeners, if you like what you heard today and it resonated, obviously you can reach out to Joel. He just gave you the website to go to learn more about syndication and learn more about their company. And I would like to ask you to head down and make sure you subscribe to our podcast, punch, smash, hit, tap, whatever you want to do to the subscribe button for our podcast. And also, if you feel inclined, please leave us a 5-star review with a review that lets people know what our show is about and that you really enjoyed. So I want to thank everybody for your time. And Joel, a special thank you to you again. And I want to wish everybody a happy rest of the day. Thank you.
Cashflow Pro is hosted by Casey Brown, founder and CEO of 3000 Capital, a commercial real estate investment firm committed to providing its investors with ongoing cash flow and helping them build long-term wealth. If you enjoyed today's podcast, make sure to hit that subscribe button so you'll be notified about all our future episodes. You can find more information about us and our investment philosophy by clicking the link in the show notes below. Thanks for listening.